Welcome back to the Tech Talks Daily Podcast. I'm your host, reporting to you live from the iconic Tottenham Hotspur football stadium, because today we're going to be diving into the complex and ever-evolving world of finance. And with me today is none other than the Emmanuel Daniel. He's a top 10 global influencer in the Fintech Power50 list for 2021 and 2022. He's the founder of the renowned platform, the Asian Banker and Wealth Society, and also the incredible mind behind the groundbreaking book, The Great Transition. The Personalization of Finance is here. And not only that, he's also a respected thought leader on the future of finance, and today he's going to help us understand the challenges and opportunities that lie ahead, especially in the realm of decentralized finance, or DeFi. So, with many of us now interacting with digital currencies and financial platforms, I think his insights are now more important than ever. So, buckle up and hold on tight so I can beam your ears all the way into the Tottenham Hotspur football stadium, where today's guest is waiting to join us. So, a massive warm welcome to the show. Can you remind the listeners a little about who you are and what you do?
My name is Emmanuel Daniel. I'm the founder of something called the Asian Banker. I started professional life, I guess, in Singapore, where I started the Asian Banker 28 years ago, and used that as an excuse to go right around the region, meet with just about every major bank CEO in every major country across the Asia-Pacific region, and then eventually into the Middle East and now in Africa. And as I was doing that, I was contemplating the future of the financial services industry. And the funny thing about coming from Asia is that I was also the point man whenever someone from outside of Asia wanted to interact with the region. So like my book, the foreword to my book is written by Barney Frank, the co-author of the Dodd-Frank Act. And I've got Dick Kovacevic, who was the chairman of Wells Fargo in his time, and a whole list of names like that. And these are people whom I've met over time because they wanted to engage with Asia. So if I was to ask Barney Frank for an appointment and lived in New York, I probably have to stand in line. But if I was asking for an appointment out in Asia, I have him all to myself for 3 weeks. So such has life been that I've evolved an interesting spectrum of relationships with key decision makers in the banking financial services industry. And then in the last few years, I've been working at chiseling away where this industry was going, what the convergences were with decentralized finance and all that. And then I came up with my book, The Great Transition, The Personalization of Finance is here. It's both a personal journey as well as an intellectual and professional journey, talking to a whole wide variety of people on both sides of the spectrum, traditional bankers contemplating decentralized finance and decentralized finance people looking for opportunities to work with traditional bankers. And I think that my views are sort of synthesizing these two worlds.
And I'm looking forward to talking about that book, the work that you're doing, and so much more. But one of the big things that put you on my radar was when I was reading that you believe that Web3 and Web 3.0 are completely different. And this is something that has completely passed me by. So can I ask you to expand on that for me?
In doing my research, I looked for this for a definition of what Web 3.0 is. And I found that all of the definitions sort of merge the two interchangeably, not stopping to realize that Web 3 was essentially a Gavin Wood idea. And Gavin Wood was one of the co-founders of Ethereum. He has it in his DNA, the whole idea that data will become personalized, that it is not the platforms, it will be the blockchains that will connect us all with each other and so on. And then take it into the metaverse and so on. And Web 3.0 is a Tim Berners-Lee idea. And he's been defending that idea. You can check out the literature, and I've spent time with Tim Berners-Lee when he was solidifying his ideas on Web 3.0, because he saw that the industry was taking it away from him. And by making these two ideas interchangeable, they were missing the point that Tim Berners-Lee is the creator of the World Wide Web, HTTP, And he wants to see a universe where we continue to exist on the web as a platform. And there's this huge battle underway that whether the world will move towards increasingly decentralization or increasingly the strengthening of the platform proposition. The interesting thing about ChatGPT is that because of the way it's been commercialized, it sort of extends the life of the platform proposition. And then enters Sam Altman, the chief executive of AI, whose own career and iterations are and biases, if I would use that phrase, is from the blockchain world. And even Sam Altman is saying that this idea that all of the world's knowledge should be dealt with on a common platform is preposterous. It's not sustainable. You can't build all the servers required to process this amount of information and create new information all the time. It needs to be decentralized. And he used that word. So we are in an inflection point at the moment, and there's a huge battle underway. And I'm probably the only person in the whole world saying this. And if we characterize it that way, then we know what we need to look for as AI evolves and where it will be predicated, what sort of ideology it will be based on.
And in your books, The Great Transition, the personalization of finance is here, you also discuss the personalization of finance extensively. So can you share some of the key insights on how this transition is impacting the traditional banking sector?
Yeah, if we get four things right, if we get identity right, if we get the transmission of value right, if we get verification right, and if we get the transmission of information right, information and value are two different things. If we get these four elements right, we have all the components necessary for finance to be a peer-to-peer proposition. So there is no need for an intermediary. There is no need for institutions to perform the role of an intermediary or any form of centralization. We have each of these elements to different extents, and the extent to which these elements are evolving and that they can be taken off centralized institutions that validate them or provide these services, we will increasingly see a transition towards incredible level of personalization. Now, personalization is a direction, meaning that we may not achieve entire or a wholesale personalization, but the roles of the institutions that today perform an intermediary function will need to transition to support these four elements: identity, value, verification, and information. Now, the interesting thing is that right now, even the institutions that are proposing greater personalization are themselves highly centralized institutions. They either provide the verification of a transaction, or they provide the liquidity of a transaction, or the whales that dominated the transaction in its inception and need to see greater democratization. So these are work in progress. The theory exists. To what extent we will eventually reach this idea of personalization remains to be seen. So even as I propose that as an idea, a direction that technology is taking all of us, and not just the industry called finance, it's all of human society. In fact, by the time I completed writing my book, I said, if finance is going to be personalized to this extent, then entire societies are going to be personalized. And that throws up a whole range of issues that we're not ready to deal with right now. So it's a general direction. And that also means that the platform industry that we've become accustomed to in the last 20 years will start fraying, and power and data and ownership of data will increasingly taper away towards the individual. And that's already underway, both by law as well as by technology.
And a question I've got to ask, as someone that is a top influencer in the fintech space, how do you envision the reimagining of financial products in the face of emerging technologies like DeFi, blockchain, and cryptocurrencies, etc.?
This is something I say to traditional bankers, and I see it almost as a mantra. If the product doesn't change, nothing changes.
Mm.
If you apply all of technology just to sell your good old-fashioned mortgage, then nothing has changed. If you apply all of technology to garner your good old-fashioned deposits, nothing changes. So you really need to reimagine what the product in finance will look like going in the future, and then work backwards to see how the technology takes us there. Now, a number of things have happened in recent years. We've seen the evolution of peer-to-peer technology, for example. It had its first iteration, and that's exactly what happened in the peer-to-peer industry. The peer-to-peer players were saying, you do not need an intermediary. You do not need the institution to have the loan sit on a bank's balance sheet, that the loan can be between the borrower and the lender at a personal level. But what ended up happening was that they still called it a good old-fashioned mortgage. And when they called it a mortgage, they then walked right into the same compliance, capital requirement, liquidity, cost of funding issues that a traditional bank falls into. And then what happened to the peer-to-peer players? They all started applying for banking licenses. So that's what I mean by when the product doesn't change, nothing changes. Now, then the question is, how is this going to play out? I'm glad to say that the first iteration always starts with the so-called disruptors defining themselves in the same language as traditional bankers. But then over time, what happens is that the technology intensifies. And right now, with AI, we find a lot more data being onboarded into any form of a peer-to-peer relationship or a peer-to-peer transaction. So not only do I have access to you as a lender, for example, but you have an access to not just to me, but you have access to a whole range of people who are like me, and you have a lot more deeper information about how I live, what my preferences are, my priorities are, and a whole range of data. Now, with a lot more richness in data, with AI applied to it, we start forming different profiles to which new types of products or relationships are possible. So, for example, a 30-year mortgage can be broken into 5 or 6 different types of lending relationships. Partially, it can be for a long-term lending relationship, and partially it can be a short-term loan or a lease or something of that nature. Okay, so it enables a richer productization, and I think that's what's evolving right now.
And it's such a big topic, and it is evolving all the time. And I'm curious, what are your views on the future of the internet, specifically within the context of cryptocurrencies and things like Web3, Web 3.0, and how do you think these advancements will help shape the financial landscape?
The proposition that crypto is making is that each of us can create our own internet space. Each of us can, with the strength of a crypto or a token or a crypto-driven application, create a platform around ourselves. So I think the idea is a crypto Wi-Fi, which is that we decide the relationships that we want to create around ourselves. That's what the crypto universe is promising. And what's interesting about crypto is not the value of cryptocurrencies. It's the fact that each of us can create our own cryptocurrencies. It's just 7 steps. Go into the internet and learn how to create your own crypto. And the second most interesting fact about crypto is that take any one of the level 1 or level 2 cryptos, Solana, Tezos. Each one of them have armies of about 300,000 programmers creating applications around them. So it's a whole new world that is going way past open source. It is energizing and capitalizing innovation at a token level. And interoperability is an important survival tool for any form of token today. So I think that where crypto is taking the internet it is promising a world where the individual has control over his relationships on the internet. And I think that that's what we need to be mindful of. And the technology is being funded by any number of in the industry.
Now, you've touched upon the significant growth of decentralized finance and its complexity. So how do you see this impacting the financial literacy of the everyday person in the street? And what steps should the industry take to better educate the public on this technology?
Yeah, actually, when I personally go into decentralized finance and try to understand staking and why is it that decentralized finance has its methodologies that it does, I'm not being a technology person. I find that I don't necessarily understand everything, and I need a techie to explain it to me. I think that decentralized finance has to be made less technical so that it becomes part of everyday life, and that's already underway. But also, what's happening in decentralized finance is that a whole range of applications that are being developed that I find are quite useful for traditional bankers to be interested in and to take a view on. For example, in traditional banking, the role of the treasurer is very important. And today, treasury is a minute-by-minute, day-by-day business that is too complicated for any one person to be responsible for. The treasurer has to work with the asset liability management executives. He has to work with the business owners and so on. And in decentralized finance, all you need is an algorithm. All you need is an application that captures the complexities of any transactions, and the app takes care of it on an instant 24/7 basis. So what I'm saying is that the complexity of banking is being demystified by decentralized finance technology. And I think that as long as traditional bankers don't resist the transition and embrace the technologies that are being developed by decentralized finance, there's some answers in there that traditional bankers will need to use. Now, one of the simplest dichotomy between decentralized finance and traditional banking is this. Traditional banking is batch processing. You're only as good as your mainframe being able to process at the end of the day. And this is true of the most best run banks in the world today. Whereas decentralized finance is 24/7. It is a never-ending infrastructure. It's an infrastructure with a never-ending processing capability managed by nobody and yet managed by everybody. So decentralized finance is enticing traditional banking ace the game, to up the game and become 24/7. In payments, for example, even the most instant payment infrastructure anywhere in the world has a batch processing at the back end. And when a global bank provides intraday liquidity, they think it's an innovation. They think that they're doing their customers a service, whereas moment by moment liquidity is a standard feature in decentralized finance.
So as this DeFi space continues to grow and the role of social media in decentralization of finance also begins to gain prominence, can you elaborate on this trend and ultimately its implications for both users and financial institutions?
Yeah, social media is increasing the volume and value and depth of the information available to financial players, whether it's decentralized finance or centralized finance. And then with AI, you find that the decisions that can be made and the products that can be developed in finance are far richer and deeper and much more personalized to the end user. And that the end user himself can have control over the products that are relevant to his lifetime needs. So social media is a good thing. With more conversation, there is more depth and perspective that can be used in AI. Because otherwise, all that AI has in finance or in banking, the general ledger information of the customer, which is static, which is historical, and which doesn't tell you anything about the lifetime needs of the customer.
And another big topic I'd love to discuss with you, and that is self-sovereign identity. How is this approach going to transform the way we interact with financial institutions? And also, are there any challenges that you think it poses to?
Well, self-sovereign identity is a work in progress, and it proposes that the individual will have control over his own data and therefore his own identity. And it works best in a networked environment, because the only way that a self-sovereign identity can be validated is when, in a networked environment, multiple sources validate each other. The alternative to self-sovereign identity is centralized identity. And ironically, a number of the self-sovereign identity initiatives are being run by corporations. And when they're run by corporations, they negate the possibility of them becoming self-sovereign. Self-sovereign means that you have control over your own identity, you pay nobody for that, and nobody aggregates your data in order to be able to validate that. So the players in self-sovereign identity are self-contradictory in that they risk becoming centralized anyway. Now, what's interesting is that some of the legislations being proposed and some of the legal situations, such as the SEC taking it out on Coinbase in the US and against Binance and so on, is that these have a opportunity of ushering in self-sovereign identity faster, because every time a regulator takes action against a centralized player, the centralized player has to scramble to look for self-validating mechanisms that show that they're not a centralized player. So you can see Binance, for example, scrambling to prove that it doesn't validate transactions, it doesn't own the transactions, and so on. And I think that this huge battle that is underway between regulators in the US especially, and some of the crypto players has a way of ushering in self-sovereign identity much faster than it otherwise would.
And you've also mentioned the term financialization. Can you tell me a little bit more about exactly what that means, especially in the context of our current financial landscape and how it might evolve with the advent of the new technologies we've been talking about today?
It's a very simple idea, and that is that anything that can be digitized can be financialized. It's just as simple as that.
Yeah.
So when you actually the business that first gave me the idea was Jeff Immelt saying in 2014, I think, that GE will increasingly generate income through data rather than its traditional manufacturing in the business. And it's going to do that by capturing data around all of its many transactions and all of its thousands of data points, and then make that data available to be traded, to be bought, sold, used in whatever way possible. And then when you think about new technologies that are coming on stream, such as the Tesla as a self-autonomous car vehicles, for example, is that they collect so much data that has a utility and a value in themselves. Now, some of this data will find its way into markets and become traded, and it become transacted and become used. And anything that can be digitized can then become financialized. Something that we don't realize is that entire GDPs have become increasingly more financialized than they were before. I think also in about 2013, the Bureau of Economic Analysis in the US started to bring in esoteric elements such as entertainment, software development, the value of franchises, and so on, as being economic activity that has to be calculated into the GDP. So when we say that the GDP of the US today is $21 trillion, a larger percentage of that is in esoteric assets that are not manufacturing or hardware intensive industries. And increasingly, as we financialize more data and make them tradable and create futures markets for them and so on, and especially crypto data, you will find that we will start measuring GDP over and above the real economy. And in that context, some analysts, and including me, we are saying now that it is not inconceivable that the US GDP can grow to be about $45 trillion in the next 15 to 20 years. And a lot of that is financialized assets and not real economy anymore. So it just transforms how entire nations are financialized, and not just the banking industry or the finance industry.
Wow, incredibly cool. And before I let you go, something else I'd love to hear a little bit more about, and that is the network effect in the context of the financial industry. Can you expand on that, and also how it's influencing the development and adoption of new fintech solutions? Because that adoption is so crucial, isn't it?
Yes, because a lot of the fintechs today have a lot of the fintechs today have reduced themselves into, I call them patch solution vendors to traditional bank problems. They started off with wanting to become disruptors and innovators, but the traditional banking industry has tamed them and brought them back into solving traditional banking problems. That's what an average fintech player is. In fact, I'm here in London attending a conference, and I was surprised that a very old-fashioned core banking vendor is calling itself a fintech player as well. So the guards are down, the banks have won, as it were. Now, the thing is that as society becomes increasingly networked, when you take industries like gaming, for example, being the whole gaming industry, the value in the gaming industry being increased, the more you are able to game with people you don't know and people across the world, and in a very, very network manner. And as virtual reality and augmented reality causes us to juxtapose real situations with virtual situations, you find that in itself creates a new ecosystem that will require tokens of value that can be transacted through them. And I think that the financial industry will find that the real economy will not generate as much assets as this augmented virtual gaming universe. And all of that is highly networked. Now, the other element in the network world that is transforming the banking industry is that there's a huge difference between where we are today and what we will look like when we are finally fully networked. I borrow an idea from an intellectual I totally respect very much, and I will be catching up with him. His name is David Ronfeld from the Rand Corporation. He wrote a paper in the 1990s saying that human society transitions from tribal to institution to markets and then to networks. Today, a lot of what we do is in the market space, meaning that in the market space, we talk about a willing buyer, a willing seller. When the transaction is completed, there's one winner and one loser, meaning one person who takes and the other person who gives. And when we think about the way in which we're thinking about cryptocurrencies today, that they only have value if we hold on to cryptocurrency, and that we need to maximize our profit when we transact in order to the next person being able to purchase it at a value that he thinks is fair and I think is fair, and then we transact. Now, that is not at all what crypto is meant for. Crypto is meant to be a currency in the networked world, where it's not the value of the token that gives it its value, but its utility in the crypto world. So the more a token is usable for whatever reason, for creating liquidity, for interoperability, for capturing NFTs, all kinds of applications, that's when a crypto or a crypto is considered valuable. And there, the value is not in the token, but in the transaction or in the asset being transacted. And so we will look very, very different when we finally transition into the network world. In fact, I would say this: everything that Charlie Munger or the Sage of Omaha says about cryptos today are absolutely true for what they are in the markets world as it exists today. But they have no clue what crypto will look like when it finally transitions into the network world.
And we can't have any conversation around the world of finance and banking and fintech without mentioning the banking crisis that we're seeing emerging throughout the world. So I'm curious, What sense are you making of this banking crisis that is brewing currently? Anything you'd like to comment on around that?
Actually, I'm very happy that the crises that are evolving are proving the transitions that I had predicted in my book. So you take, for example, Silicon Valley Bank and also Signature Bank and First Republic. What were they? They were deposit crises. They were crises of having too much deposits without an outlet in terms of assets to redeploy them on. They couldn't lend them fast enough. They had them invested in treasury bonds, which then the yield wasn't sufficient to cover the cost of funds on the asset liability side of the balance sheet. And I said that the product that the banks need to give up most of all is the product that they love most of all, which is the deposit product. I said that in my book long before the crisis came on board. Now, the way in which the crisis has come around is not the point. The point is that there is no product in the banking industry that is safe, that keeps them out of trouble, that if they get it right, they're doing the right thing. In fact, all of these banks that got into trouble, Silicon Valley, Signature, were doing absolutely the right thing that all banks do with excess deposits. Now, what's going on with the deposit business? The deposit business has transitioned from its role as a savings device where the saver to a compounded interest rate is able to secure his wealth to becoming more of a utility device. Today, there is as much, maybe not as much, but growing at a compounded rate of digital wallet players who are just as important players in the deposit business as traditional banks are. And the digital wallet players, their proposition is not a good interest rate. Their proposition is utility. And there's a wide range of digital wallet players. There are those that are just mere digital banking, electronic banking businesses. And there are those that carry tokens. They could be cryptocurrencies or actual money in the accounts. And the more we move towards tokens, there will come a time where the battle in the digital wallet space will be on the front of stable coins, for example, where the value proposition of a stable coin is not how much interest the player gives, but how useful that stable coin is in the digital space. And I honestly see that as this transition evolves, that it's not inconceivable that the deposit business of the banking industry will eventually become a competition between banks to issue stable coins. Just remember I said this because this is how I think the transition will take. Now, what actually happens in the course of getting there doesn't bother me at all. Legislation is not in place. Some legislators don't want banks to issue stable coins, and banks themselves haven't figured out why they should be in this business in the first place. But everything points in that direction. So just remember I said this.
Wow, that's a great moment to end on. And for anybody listening, wanting to dig a little bit deeper on everything we talked about today, from maybe checking out your book, The Great Transition, The Personalization of Finance is here, to finding out more information about Tab Global or connecting with you or a member of your team, where would you like to point everyone listening?
Neil, very simple. EmmanuelDaniel.com is a good starting point. The table of contents of my book is there. Some of these ideas, as I respond to them, I write short notes and I post it on that page. Like this huge distinction between Web3 and Web 3.0, I've written something up there, and it's like my notepad. And then every other thing I do, you can find your way from there. EmmanuelDaniel.com.
Awesome. Well, as we approach 2,500 interviews, I can honestly say that nobody said to me that the quietest place they could find to record a podcast was in the Tottenham Hotspur Stadium with a capacity of 62,850 people. But you've managed to do it. It was a fantastic conversation. We covered so much in a small amount of time. But just thank you for sharing your story and your insights with me today.
Neil, thanks for your patience. There were moments where there were crowds walking past, but you were so kind to me. Thank you very much for putting up with me on this call.
And that's a wrap on today's enlightening conversation with Emmanuel Daniel. And we covered so much on the future of finance, DeFi, the importance of understanding the evolution of these systems, and I hope we've given you plenty to consider. And remember, it is a big and intricate landscape, and every single one of us is a part of it. So whether you are a tech enthusiast, a cryptocurrency investor, or just someone or a business that's keen on keeping up with the digital world and the world of fintech, there's always something new to learn and to understand. So once again, big thank you to Emmanuel Daniel for being with us today, sharing his expert insights. And if you do want to dive deeper into this subject, I do strongly recommend you check out his book, The Great Transition, The Personalization of Finance is here. And if you've got any questions you'd like to ask or comments or insights you'd like to share, email me, techblogwriter@outlook.com. Connect with me on LinkedIn or Twitter, just at Neil C. Hughes. But hey, this has been Neil C. Hughes from Tech Talks Daily, coming to you from the Tottenham Hotspur Football Stadium. So stay curious, stay informed, and most importantly, stay tuned. And thank you for listening. But until next time, don't be a stranger.